Well, for euro, it's obviously going to be negative over the medium term. One of the biggest things that we see from this uncertainty, which the referendum does kind of inject uncertainty into Europe, is that tends to limit investment. And so with the Italian referendum kind of offsetting the positive news that we had from Austria over the weekend, this is going to leave clients and mostly FX traders nervous about the outlook in 2017. It raises tail risk, and so for that reason, it will be euro negative over the medium term. Because it was the expected outcome, how euro negative it is over the London session remains to be seen. With the ECB later this week, again, it remains to be seen. But undoubtedly, this will come back and will continue to weigh on the euro at some point in the future.
Pick up some trading ranges that you're watching, Richard, because the low end from 2015, the March trough that we had 1.0457, we're not far off that territory. Do you think we're going to test it anytime soon?
More than likely, we're going to trade through that range at some point over the next month or two. Again, I would be cautious ahead of the ECB. There was a lot of assumptions going into this in the market, and one of the things that we find is that clients are tending to lighten the risk ahead of the ECB. There's essentially concerns that some type of a taper will be announced and how much will be announced. And so, like I said, over the next 24 hours, that's probably going to still kind of remain a good support level. But undoubtedly, our view is over the next 2 months, that will be broken. We're looking more at the below 103 level over the next 2 months.
Richard, what's been interesting, I think, is just how well markets have absorbed a lot of the political risk. And just to the question of what happens today and then what happens over the next few weeks or so, could you just walk us through the scenario based on what we saw with Brexit, what we saw with Trump?
Sure, absolutely. I think it's going to be a key indicator how BTPs open up today and the volatility that we see with them. It's undeniably, it's going to be negative for bond markets. It's negative for Italian banks, as your previous guests have covered already. And I think where the concern for euro is, how does this change the overall investment structure? We won't know more of that until we actually get through the ECB, because one of the largest uncertainties is what is their thinking? How much will the Governing Council react to essentially sell-off in fixed income and yield volatility in Europe? Our own view at Citi is they're not going to react to it to a large degree, and that's going to sound somewhat more hawkish than where perhaps the market is placed. But over the medium term, it does create an environment where investors are just going to be uncertain, and that uncertainty is going to limit their investment. It'll limit the investment in European equities, in European fixed income, and ultimately that's what becomes the euro negative driver.